Good afternoon and welcome everybody to the Trading Success Blueprint, the Beginners Online Trading webinar. My name is Danny and I will give you the webinar today. So to begin with, first we'll have a quick explanation how the webinar is going to happen. The first part will be more of an introduction to the company, to AvaTrade, what services we have here in this facility to assist you along your journey while trading. The second part will be the majority of the webinar. It will be very practical part. Very straightforward. And lastly, if we'll have spare time, we'll speak about analysis, perhaps how to optimize the entry and so on. Okay, just on a nutshell, just the idea. It's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Furthermore, there is a very common request to receive the webinar, to see the recording of this webinar. And as I always say, the webinar is recorded and being uploaded to YouTube to our channel. So for your convenience, if you wish to see this webinar again, you can just go to our YouTube channel, and there you can find all the videos, not just the recording of this one, but a huge library of content and for you to enjoy. Let's get ourselves somewhere to jot down the notes. Okay. We are going to have the webinar on this interface, which is just by logging into the website and going to the web trader if somebody wishes to follow. And like I said, we will begin with an introduction. So, as many of you know, AvaTrade is a regulated company. We're here since 2006. We have license in many continents in the world. Our customer service, in case you got a query or a question, can be found here at the bottom left. You can chat with us or you can converse with us through the WhatsApp. Or if you're using a different interface, so naturally, you're not going to see that button if you're in a different place, and you wish to contact customer service, you can do it through customerservice@avatrade.com. That's regarding all the customer service. Regarding the trading aspects, we can assign a senior account manager that can give you assistance on that side. So everything's basically related to trading, from analysis, calculations, risk money management, just learning how to trade in general. A senior account manager is the person to contact. If you don't have an account manager yet, if you don't have a senior account manager yet, you can contact the customer service to ask a senior account manager to be assigned on your file to give you assistance along your journey. Okay, now, as I said, this interface here is called a web trader. Okay, that's what we're gonna have the webinar on. We also have the trading app. It looks a bit different if you're looking at the computer and you're looking at the phone, so it looks a bit different, but the interface functions almost the same way. Let's write down underneath. Sorry, underneath we have MetaTrader 4 and MetaTrader 5. Okay, and we also have Ava Options and Ava Social. Okay, the first three is not something I would like to explain about because they're quite self-explanatory. MT4, MT5, and the Ava Options. Okay, options is a little different concept. This is why we're not gonna explain about it today. But Ava Social is something that I think is very controversial for beginners, and it's something worth mentioning. So Ava Social, what it does is it allows you to do two main functions. One is to follow, the other one is to copy. So when I'm following someone, let's suppose I have here two buttons, copy and follow. Let's suppose that we go with the follow. Let's explain what it means. So the follow means that I'm gonna follow somebody's strategy while a trader is trading. What happened is I'm gonna get a notification with the positions that he took, and then I can decide accordingly if I would like to go ahead with the position the same way that the trader did, or I don't. Okay, that's following someone. Following, that means that the trades are not being done automatically. It's done by hand. But the copy function, okay, allows you to also, you're going to get the messages with the positions, but the trades are executed automatically. Okay, positions are being opened automatically as soon as the traders that you're following, copying, is trading. Okay, so your account will behave the same way. Now, the great advantage using Ava Social is that you don't have to copy somebody by exact. What you can do is you can change the proportion in lot size, and in case you are copying somebody with much bigger balance, so naturally, if I'm copying somebody with $1 million in his account, and I'm with 10,000, there is a situation he will take a position my account won't handle, okay, or won't even be able to take the position, right? So this position I can take with what I have. Okay, well, we don't understand completely what this segment here means. We're going to explain what it means. But the idea here is that with Ava Social, you can customize the lot size difference, and you can go with the minimum. If you would like to test something out, or you would just want to make comparison, you don't have to copy a trader exactly as they're trading. Okay, you can change the proportions, and it's very helpful. Unfortunately, I can't show you the app now, but if you download the app, you'll see it's very accessible. I highly recommend it, especially if you're a beginner. Not only, but especially if you're a beginner, from the reason that I've explained. You can follow a trader, you can copy a trader, and that's just great. Okay, let's take that. We're going to carry on with the web traders I've explained. Therefore, I'm separating it from the others with the understanding that what I'm going to show you now will only be found on this interface, naturally, okay, or on the app, okay, as we said. Now, what I'm going to show you here is the signal section, okay. If you go to the left, let's close that for now. If you look at the left column of the interface, okay, and here I have my personal details. Here I have my trades, positions, orders, like pending orders. We're going to explain what it means. History, signals, which I'm going to show you now, news, discovery, and other platforms. In here, some educational material. And in here, we already saw the chat. Okay, so if I click here on signals, you can see that next to Australian and Canadian dollar, you have this little icon here, lightning icon, right? And in here, it seems the same for the signals. That means that Australian and Canadian, if I'm going to click that thingy, it's going to open here a signal. Okay, I'm going to show it to you from the section, but also you should know that you can access it from here. So if I'm looking at this currency pair and I see, okay, there is a signal here, what exactly does that mean, a signal for an instrument, okay? So I can expand the screen just to make things a little more comfortable. And I can see here some things, resistance, support, okay, let's go down a bit. There is a sell scenario, there is a buy scenario, some key levels here. It's also elaborated here, the support and resistance, okay, not only on the chart. And then I see here something called TPSL, okay. We still don't know what that means, so let's dive in and understand. The way that the signal is constructed, but let's do it from the signal section. Okay, let's click on the signals. And let's pick ourselves something nice to analyze. Okay, maybe S&P or NASDAQ. Let's go with NASDAQ, okay? Let's expand again the screen here to see things more comfortably. I probably want to match the validity of the chart seen here to what I see here. Otherwise, the levels that I see on the chart might not match to what I see on this chart. Okay, and the way to do it is, as you can see, the validity here is daily, and in here I'm looking at minutes candle. So if I'm going to check, if for instance, if I want to see 20,680 and I try to pinpoint that on the chart, it's a little too far away, right? If I'm going to match the validity to days, okay, like I did, and I'm looking at days, then it makes much more sense, and I can see the level mentioned on the signal. Okay, 680, as you can see, now we get to the level. Okay, and so how does that work? What it means? It means that there is a buy scenario here, okay, and there is a sell scenario here. So if I click here on the buy scenario, what will happen is I'm going to have a take profit and stop loss already applied on the position, ready to execute. And let's see what that means. So let's click here on the buy scenario. That means naturally our intention is that the Nasdaq will go higher, right? When we buy something, our intention is always that the value will increase. Okay? If God forbid it goes down, we're going to have a loss. Okay, so let's look at the signal here in the buy scenario. Let's see. Okay, so in the buy scenario, there is something called take profit. We'll understand in a minute what it means. There is something called stop loss, vice versa. 430, that's approximately here. Maybe just a little higher. Okay, like that. Okay, so if it gets funky next to the numbers and you want to land it on an exact figure, but you don't want to keep dragging it to the precise price, because it doesn't stay on it. So what you can do is you can click on the line here, and in the coordinates you can just paste. You take what you have here and you paste it like that. Okay, you can even change the color. Let's change it to red, as this is the stop loss. This is gonna be green for the take profit. Okay, I can flatten that out. We don't need the 93. Let's keep it this way. Okay, and now what we're looking at, okay, in this case, with one indice, with one Nasdaq, okay, is that if it gets to the green line, so take profit, what it does, let's speak about it for a moment. It closes the position, okay, let's read what it says here. A preset take profit to book potential profits when the market is moving in your favor. In other words, what it's telling us is we can mark a price for the platform to stop the trade automatically. Okay, same apply with the stop loss. The only difference, take profit needs to be higher when I'm buying. Again, when I buy, our intention is that the value will increase. Therefore, the take profit, when I'm claiming my profit, has to be higher than the current price. Okay, stop loss needs to be in a lower point, allowing me to set the price to close with a loss. Okay, so this one stops it with a profit. This one stops the position with a loss. As you can see here, I have two rectangles in different colors to emphasize a bit better how it works. Okay, this is our profit area. If it gets to here, we're going to make 128. If it gets down to the 20,430, we're going to make 41. Okay, super simple to understand. There is really nothing complicated to it. We still, again, don't understand what that part means, but that's okay. We'll learn about it in a moment. The idea here is this is very, very easy to execute. For instance, let's demonstrate with another instrument. Let's take maybe oil. Okay, and this time you see that this is in a buy scenario. So once again, we're clicking here on view signal, expanding the chart. Again, I can make comparison, match the validity. Oh, it's already here. How great. Scrolling down, seeing support and resistance. Okay. We saw that this is in a buy scenario, so let's give it a shot. Click here, clicking here on the buy, seeing that if it gets to 76.3, which is just a second, which is, again, if it doesn't, as we've learned, oh, okay. You see, as soon as I wanted to use the magic trick, decided to stop playing games. 74.70, that's almost where we are at right now. Okay, so, all right. One more thing about the signals. The signals is something you want to use as an additional layer. Okay, and if you go blindly with the signals, it's not always going to give you the optimized results. It's going to give you good results, okay, but I would recommend you guys to also do your own analysis, because sometimes you have to make some adjustments. For instance, if I feel that the stop loss is too close, 74.70, I can maybe take it a little farther down. Okay, let's say this much farther down, just as an example again, 74.50. Maybe this way I feel a little bit safer that it won't trigger too fast. Okay, giving it another 10 cents of flexibility. Okay, and that's what we see. I can also, if I feel this position might be too big to my account size, okay, and I want to have maybe a lower position, I can also adjust the lot size, right? And then numbers change. Okay, let's carry on. We don't want to delay only on the signals. We're going to carry on and look at some other things as well. My intention is to give you as much content as I can. Do we have any questions about that bit, guys? Any questions about the signals? Any questions at all before I'm carrying on, before I'm moving on? No, Andre, this service currently doesn't cost any money. You can use it freely as much as you want. Yeah, all right. But thank you for the question. Okay, the service, guys, doesn't cost any money at the moment. Let's carry on. The next thing that we're gonna look at, so this was just 2 words, just a quick one about the signals here. 2 things. This is from the Trading Central. Okay, not AvaTrade. This is another company we work with. Quite amazing company. The second thing is this is technical analysis based. This is based on a certain amount. Sorry, this is based on a certain value. And sometimes when you're going to use the signals, if you scroll down, you see that this area here is blunt. Okay, the stop loss and take profit. And why? Because this signal, the analysis that was done on it it's not valid anymore. Okay, the signal is produced with a certain agenda, with a certain analysis. Let me give you another one. Okay, you see, so that means that this signal is not valid anymore, and we can't use the signals at the moment. Perhaps in the next round it will have a signal, but not currently. Okay, that's what it means. If you click it, it doesn't let you use the signal, and even if you try, you're not going to get the take profit and stop loss ready. It's just not working. So you have to wait if you want to use Dogecoin with a signal. Okay, because at the moment it doesn't work. And this is, like I said, technical analysis. The next thing that I'm going to show you now is for fundamental analysis. And the way that this works is I'm going to click here on the news. Okay, and I can read all kind of things about the, well, crude oil as an example, gold, Bitcoin, and USD CAD. So that means you see related instruments. So that means that if I'm going to go through what's written here, I might have an idea about those instruments. Okay, this might hint that those instruments will fluctuate according to what we read here. And it's not only that, I can there are different categories here. If I'm more, let's say I'm trading more stocks, or I'm trading more specifically commodities or specifically indices. Okay, and then I can just focus on one thing. And as an addition to that, if I want to have an idea what's worth analyzing, what's worth reading about, that the market is, you know, it's interesting these days, we have another function. So it's underneath. If I'm going to go under news, there is discovery here, and in discovery I go to market buzz. Okay, and in market buzz, the way that things are looking at are like little circles. We're going to see it in a moment, bubbles. Okay, and in those bubbles we can see a particular stock and it's mentioned. Okay, so we have Apple here 480, Nvidia 244, Microsoft, Tesla. Okay, and I can just pick one. Let's suppose we're gonna let's go with Apple. Okay, just as an example, and I can focus on a specific subject. Let's suppose that I want to focus on the product release, okay, for the new device. And I can go through that and I can read and do great fundamental analysis. Okay, great fundamental analysis. It's also showing us the difference from the last close. In here, you can change the time frame. At the moment, as you can see, it's really mentioned Apple, and I can go back and find another one to diverse. Anyway, you guys understand the idea here. This is super accessible. Let me toggle this off. I want you guys to see what happens. Okay, so if I don't mark, I can just do it on my own, right? Okay, manually. But in here, you can specify which articles it was, and you can read specifically on it. Okay, great. So do we have any questions about that bit? So we went through the signals, we went through the news, now we went through the market buzz. Do we have any questions about that bit here? No questions. Excellent. That's excellent. Let's proceed. I think it's safe to begin the second segment. Okay, let's see. This section is connected to the articles. Yes, exactly. Like I said, you can pick what you want. It doesn't matter. I took Apple just to show, but it would work with anything else. Let's take Tesla as an example. Right, you do it this way, and then you can click it, and it's going to show you here the article, and you can keep doing analysis. Okay, you can go directly to the website and do even further analysis, but that's entirely up to you. Let's see, there is a question here: to enhance your research and up data on what's happening with the stocks. Yes, exactly right. And you can choose even a specific topic, and you can read about a specific topic, and that's just great. All right, so let's carry on. Actually, let's begin the second part. Okay, but for that we gotta find ourselves a nice instrument to analyze today. Okay, let's see how maybe platinum is doing. Oh, that's just amazing. That is just amazing. Okay. All right. So I randomly took platinum. I don't know. It just seems very, very interesting. As you can see right now, it's crossing the previous resistance from the 8. Sorry, from July. Okay, 8th of July. Okay, we'll get to it. We'll get to it. I'm just preparing here things just a little more visibly. Okay, let's have first a guide through and then we'll dive to the chart just so we can be on the same page with the toolbar. Okay, in here I searched platinum manually. Okay, you saw that I did it from the lists, but if I would know that I'm looking for platinum, so what I could do is just put in gold to obviously switch to something else. Okay, so let's suppose that I'm with gold. Okay, and I want to have platinum, okay, the chart. So I'm gonna write down platinum and I pick it from the list. And if I click it, it opens the chart. Okay, and then I'm gonna, okay, let's keep it for now. If I go to the right in here, we're already familiar with this. This says different time frames. That means now that every candle on the chart is 1 day difference. I'm going to show you a way how to verify that. In here, I can change from candles to the line. We've already learned many times that with the line, we don't always get the necessary levels. So sometimes if the chart looks like this, having candlesticks with only the line, I want you to see what happens with the rectangle that I've placed here on the chart, okay? Okay, there is nothing, you see, there used to be a candle here with a nice tail that can hint for reversal, and with the line we don't have it. Okay, so in here it does exist. Okay, the next thing that I'm going to show you, let's get rid of that. The next thing that I'm going to show you is the crosshair. By default, the crosshair that we get on the chart doesn't show us information from the candles. As you can see, if I go across the chart, nothing happens. If I click on the candles, nothing happens. Only if I enable the crosshair. So from here, I can click on the arrow and I can go down from no crosshair to crosshair. And now if I go across the chart with my hand, then I have some rectangle here with the data, right? Open, close, high and lows. Then I can go through and I can see that each candle, this is this 22nd, this is yesterday, 21st, 20th. Okay, very, very simple to understand. And this is how I can do proper analysis. If I carry on to the right, there are different layouts, 3, 2 side by side, one above each other. Okay, whatever you more comfortable for your eyes. In here, we're going to use that anyway, so let's not do that now. All the way to the right, before the sell and the buy, there are all the good things that I used. As you can see, you can use all kind of shapes that helps you capture the trend in a bit better visual way, if you want to put it this way. Okay, it's for you to decide. And now let's get to work. So we have here the sell and the buy. It doesn't matter if I click sell or buy to get the sidebar to open. So let's go with a buy because I can always change it. Right now, as you can see, this one is a little gray. This one is a little lighter, right? There is a lighter blue here, darker blue here. And if I click here, that means that it's marked. If I click here, it means that it's marked. You see that this is a lighter blue. Now there are two tabs here. There is the order entry, which we can compose the position and execute the position. And in here, there is all the instrument details. And in here, I can find the lot size, the spread, the overnight fee, the hours that it's operating. Okay, let's go back. So in the order entry, which will be the main focus in our webinar today, we can compose the position and we can use some things here to simulate what can be the potential result before we even open the position. Okay, so the first thing we would like to do is we're going to take the lot size to 0.01 just to be able to simulate properly. Right now, we're going to enable the execute when price hits, the take profit, and the stop loss. Okay, so this guy we're not familiar with yet, right? This one we know, okay, it closed the position automatically with the profit. This one closed the position automatically with a loss. Great. So what I can do now is I can aim for a certain price to happen, and it's going to show me here the possible profit. For instance, if I'm going to go with a, let's stay with a buy. Okay, it seems like this is quite bullish anyway. So we can set the price a little higher. Let's say even $20 higher. Okay, and with this, we understand okay, just a second, let's be precise with the okay. This was also okay. Now that means at a moment if I'm going to open the position, okay, and we see that there are two lines. One of them is $20 higher, the other one is $20 lower. Okay, and since I only have 1 unit, since I only have 1 ounce, because it's moving 20 with 1 ounce, I can make or lose a 20. Okay, the price here doesn't make any difference. It doesn't matter which instrument I'm going to buy or sell. What I'm going to show you now will work similarly. Okay, whatever unit I will acquire, it doesn't also matter if I sell or buy. Okay, whatever units I have over whatever price difference I have will result, as you can see, $1 per dollar. Okay, that means that if I increase this by let's say to 10, this 20 will be 200. Okay, as you can see, I increased to 10, the 20 became 200. Let's also correct that one. Okay, and 0.6. Okay, now from the other end, if I keep it this way, as 1, okay, and I, for instance, extend the take profit by 10, okay, so from 1066, 1076, this will be 30, okay, because we took it $10 away, $10 farther from the entry, okay. The same formula works for the stop loss. So the farther away your stop loss is, the more you can lose. Okay, we have an equation for that. We're going to jot it down in just a moment. Let's first place down the name of for the instrument. And also we do some rough analysis to understand how we can design a position. Let's get rid of that. Okay, and with platinum, with platinum and with the buy, okay, let's suppose that our intention now is that the value will increase. Okay, and like I said, there is, let's also mark that so we won't forget that. Okay, and we can also okay, we can leave it this way. And now when we're looking at platinum, we see 1046 is where it's at right now. Let's suppose I think it can carry on up, but from what I saw, the previous price that it's been was, as we said, in July. Okay, now let's understand a bit about support and resistance. What is support and resistance and how does it help us making any decision with trading? Okay, so support and resistance are edge points on the chart, as we saw from the signals earlier. Okay, and as you can see, I'm marking the levels. I'm marking the levels on the chart, the highest and the lowest levels, to have some proportion to what to expect. Okay, and the recent resistance that we see is from July. Now, of course, if I'll change to weeks, this will be a bit clearer. Okay, as you can see. Okay, this is what we've marked. This is July. This is where we are at right now. You see that it's very close, right? And I have a reason to believe that platinum is not going to pass that point unless something fundamental will cause it. Okay, as you guys know, gold has broke another all-time high, even though it flinched down by $120 approximately 2 weeks ago. Still, the agenda is that gold can possibly carry on up. Now, if platinum will do the same, as you can see the resistance being here, it might go even higher. So when I'm aiming for a buy, I really need to put some thought about when to close the trade. Because if I take it here and it doesn't pass that, it doesn't break the resistance, okay, the way down can be very long. So I need to know where I'm standing. Okay, let's suppose at the moment, let's have a closer look. Now, this is definitely bullish at the moment. Okay, let's assume that platinum still has another $20 higher to go. Okay, which is, as we said, 1046. $20 higher, it makes it 1066. And the next thing that I'm going to do is not to buy now. Okay, not to buy now. How does that work? As you can see, there are 3 pending orders. There is take profit, there is stop loss, there is execute when price hits. So instead of buying now when it's on the edge and I'm not really sure that this is the wise thing to do, I can just place a pending order to launch my position getting to a certain price, and then it's going to open it automatically. So instead of buying here on the edge when it's almost at the resistance, I can say, listen, let me buy at 1035, okay, as an example. And if it gets back to 1035, I wish to take a buy. Okay, and then even if it doesn't get to the resistance, I can still grasp the $20 here. Let's take it a little lower. Can even make it 1030. Okay, so my buy price target will be 1030. Okay, and then the $20 that I was hoping for can be 1050. And in the stop loss, okay, 1010. Okay, now with those numbers in mind, and I can see that I can make $20, that's quite amazing. But the problem that I have with that is $20 is not really what I want to make. Okay, let's suppose that my target is $1,000. Okay, and I wish to make $1,000 and I wish to do it in a week. All right, so to make $1,000 in a week with Platinum, first, this will, it's better for me to change the validity to weeks, and then to have an estimation how much can Platinum go with this scenario. If it can move really $20 in a week, I can do one of two things. One is I can look at the candles and say, listen, last week the open was 984, close was 1027. That's approximately $50 in between, and I can just rely on this candle that it will move $50. Okay, the problem with this is that every candle here is different in shape and size. So for instance, if this candle looks quite small at the moment, it might not move as much as this candle or that candle at the same direction or on the same fluctuations. What I can do furthermore is I can apply an indicator called average true range. Okay, so then I can click here on indicator and I can go AVE for average true range, click and drag it to the right. And now, instead of analyzing candle by candle to have an approximate average for Platinum to move per week, I have the indicator that does that for me. And all I have to do is just to tell him how many candles to analyze. And I can go from 14 to, let's say, 5. To take the previous 5 weeks, which makes it a month and 1 week. Okay, I can also change the color to something that won't confuse me. So I'm keeping it this way, clicking save, and it's right here at the bottom, and it's confirming. Okay, let's just jot it one time so you guys can see the exercise. Okay, so that's open, close, high and lows. This is manual check, just seeing the difference of what happened with the previous candle. Open here is 984.5. The close here is 1027.7. High is 1031.6. And low is 976.4. Of course, if I will subtract the open, the open from the close, it's 43, and the high from the lows, okay, 55. And as you can see, the ATR did pretty good job, giving us $50 on average. So me expecting 20 to happen is, well, how can I put it? Very, very realistic, because it's half of the average. It's even less than half of the average. Okay, so in my movements, I can place here $20 price difference. Okay, what is the price difference between the entry to the target price? So this is $20, the price difference, and also ATR equals 49,460. Okay, now according to that, what we can do is we can go target divided by movements equals units. So that means if I divide my 1,000 by 20, how much is that, guys? Let me give you 10 seconds to answer the question here. How much is 1,000 divided by 20? Okay, let's go for a quick recap. We can go for a quick recap. Okay. So I've jotted down for you guys to see here the scenario. So perhaps it will make things a little easier to understand. Okay, so 1,000 divided by 20 is 50. So everybody who wrote 50, you guys are absolutely right. Okay, let's test that out, see if it works. So in here, we're gonna place 50, sorry, place 50, and of course, it make pure sense. It will be a flat 1,000 because we used execute when price hits. Therefore, it leads us to 1,000 for profit or loss. The problem that I have with that is, first of all, I would like to know if I have enough money to acquire this position in the first place. And the second thing is, I'm not sure that I'm happy. Okay, making 1,000 doesn't sound too bad, but losing 1,000 out of 10,000, what do you guys think about that? Is that a good exposure, or it's a little too much? What do you think? 1,000 out of 10,000, is it too much? Considering, let's write down here, risk. Okay, considering I'll be left with 9,000 if I would lose this position. So we have 10,000. Okay, is that acceptable? What do you guys think? You think that 10% is okay, or it's a little too high, and we might need to shape the stop loss a little different? Okay, so Kai, you wrote down that this is too much. Francis also, 10% is a little too much. Okay, so you guys, could you give a number as an example that you think it's reasonable? If it's not 10%, what would be a more reasonable percentage? Okay, 1 to 2. All right, thank you, George. So 1 to 2%, but not 10, right? So we must find a way in this case to make this 10% 2%, but still sustain the profit as we want to keep it like this, right? So we need to customize this, but we want to keep the profit as it is. Now, if we would touch the lot size and we would minimize the lot size, watch what happens with both possible and possible profit and possible loss. Okay, so we're going to make it 10 as an example. And now instead of making or losing 1,000, we have 200. Okay, because now it's 10 over $20. Okay, so this is 2%. But the problem with it is that it doesn't sustain. Okay, so we lower the exposure, but we couldn't sustain the profit. Okay, there's a problem with that. But what we can do otherwise is we can, just a second, is we can minimize the difference between the stop loss to the entry. So instead of 10,010, it can be, as an example, 10,000 and let's say 25. Okay, and then when it's $5 away, it's only 250 and not 1,000, and we get to sustain the possible profit. Okay, how did I get to that? You probably ask. Is I took the length, the proportion between the entry. Again, this is the entry, not that. This is the entry because we're using execute when price hits. Okay, let's recap everything quickly so we can get to the last bit. Okay, in the beginning we saw platinum is going up. After we saw that platinum is going up, we had to verify here the resistance. We saw that currently it's on the same level that it's been on July. Because this seems a little bit dangerous, we would rather set a buy in advance on a lower price for confirmation, which will be okay. So again, if it doesn't let us keep it on a certain price, we can just change the coordinates. Okay, and this became our entry. This became our take profit. Okay, 1050, which is a little higher than where we are at right now. It's a bit difficult to see. Let's switch back to days. Okay, we got it to work. We got it to work. Okay, and the stop loss 1010 is here. Okay. And in this scenario, in the beginning, we could have made 20. We saw that 20 is not quite enough. We are aiming for a much bigger amount. We were aiming for 1,000. Due to that, we had to increase the lot size. Okay. First, we wanted to know if 1050 is a realistic price to aim for. And this is how we applied the ATR. Okay, so we started with the target. We choose the time that it's reasonable to sustain this position for. And then we figure the movement through the ATR. We could have also analyzed the candles, but this is again very time consuming to put all the numbers down. So we'd rather use an indicator for that. Okay, because we're looking at $20 and not 50, we had to divide the target by the movement. So we have 1,000 divided by 20, and that's 50. After that, we saw that the possible result is what we wanted. But unfortunately, with a risk money management, losing 1,000 might be a bit problematic, as mentioned by the audience. With this agenda in mind, we reduce the difference between the stop loss goal target to our entry to reduce the possible loss while keeping the same possible profit. Okay, so this is one way. We don't have to change the lot size, otherwise it will have an impact on the profit as well. All right, the last thing that I'm going to teach you today, guys, with the few more minutes we have remaining, is to know if we are capable of taking this position. And how do we do that? We do that with a very, very simple exercise. We're going to put here price per unit. And then we have units equals value. And that means that if we take the 1044.7 times 50, that equals 52,300. Okay, and if we divide the value by the leverage equals margin impact, and margin impact equals necessary amount to open the position. In other words, what I actually need in my account to open the position is not what's mentioned here to the right. Okay, it's what's mentioned here to the left. Because leverage only multiplies buying and selling. Okay, so we have something that cost 1046, okay, with the buy. We multiply that by the 50, So if 1 unit costs 1046, 50 units cost 52,000. Yeah. And because we're multiplied by 50, we can basically divide this by that. And then we know that this is what we only need. So the leverage actually requires us to have a minimum margin in the account available. This is not again referring to the balance or anything else in here. This is only referring to available margin. As you can see here, the minimum amount required available and free margin to open the trade. And if you have this, then you can open the position. I don't know if safely, but you can open the position. Okay, this is something else to do. Also with risk money management and margin comparison, this is something you usually do after you have some guidelines to work with. And as I said in the beginning, the approach used here, as you can see, it's a process, it's a skill that you have to get used to. Because this process, if this wasn't a webinar and I'm just doing it on my own, usually it takes 10 to 20 seconds. For us, it took 20 minutes or maybe even half an hour because we had to go through things. But once you get to the idea here, it becomes super, super simple. So simple that it works like a reflex. Okay, and when you look at the charts, you already know the levels, and it's very, very efficient. Okay, guys, I hope that you have learned at least one thing off this webinar. I am aware that I can't go, sometimes we have to raise up the pace, as they say. But like I said, you can watch the recording again in our YouTube channel. If there are parts that are too fast and you have to recap, just go to our channel. You can enjoy a lot of content that we have there, not only this webinar, fundamental technical analysis, and just really use that content. There is no reason why not to. All right, other than that, guys, it's been a pleasure. I wish you all great week, make a lot of profits, best of luck with trading, and have a good day.